Hello everyone, Brock here with Strategic Stock Traders, where we help create financial independence through knowledge. In this video lesson, we're going to quickly discuss what the MACD indicator is and how this indicator can help us track down really big gaining stocks and when to buy and when to sell out of these stocks. So real quick, our website is www.strategicstocktraders.com. Our phone number is 843-580-6301, and you can email us at any time, team@strategicstocktraders.com, and you can also like our Facebook page at facebook.com/strategicstocktraders. So let's go ahead and get started with this lesson. Like I said before, we're going to be going over moving average convergence divergence, also known as MACD, or the MACD indicator. Now, MACD, what is this? Well, it's a trend following momentum indicators which shows a relationship between two moving averages of prices. Basically, it's three indicators in one, and the most common MACD signal is 12-26-9. Now, in my video lessons, I discuss exactly what the 12-26 line means. I tell you about the other three indicators, and I really break it down so that you understand every single thing about this indicator as you can, and how you can even actually change it around to your specific trading needs. Now, real quick, this stock is CBIS, and if you go to the website www.stockcharts.com, you can bring up this free source to type in the stock's name, the ticker symbol, and just look at an overview pattern of it. And you can look at 1 month, 3 month, 6 month, etc. So coming down here, you can see this MACD, and it's set on 12, 26, and 9. And basically what the MACD is you have two lines. You have the black line and the red line. The black line is called the fast line, and the red line is called the slow line. When the fast line, the black one, crosses above the red one, the slow line, that's a buy indicator, as you can see right here. Now, when the black line falls below the red line, that's your sell indicator, or the stock is losing momentum and the sellers are moving in. So let's just come here. We can compare the two patterns here. As you can see, the stock right here was about roughly 1 cent. Right when our MACD, our black line, crossed above the red one here. Now, as you can see, if you rode the stock all the way up, and if you were to sell out roughly about 6 cents, you're looking at roughly 600% profit. Well, the trick here is, so you knew that the black line crossed above the red line, so you knew to buy, and you knew that the buyers were moving in. But when do you know when to sell? Because all you're going to see down here is just the black line is split away from the red one. Well, you don't really know. So what I recommend is setting this thing called a stop loss, which trading platforms like TD Ameritrade, Scott's Trade, E-Trade, all those different kind of trading platforms, when they ask you whether you want to buy or sell stock, after you purchased it, you of course want to click sell. And when you click sell, it's going to ask you what type of sell order would you like to execute. And you want to click stop loss, which what the stop loss is going to do is, let's just say you buy stock at, for example, $1, and the stock goes up to $1.15, and you set your stop loss at $1.10. Well, what happens is if the stock falls below $1.10, it'll sell you out automatically at $1.10. So basically, it's just to help capture in gains. It's also for the people that can't always be at the computer screen, glued on the screen. You know, you got errands to run, or you have work in the morning, etc. So coming down here, we would purchase stock right here at 1 cent because our indicator MACD is pointing at a buy, and we would every single day move our stop loss to what I like to do is roughly about 15% of the current price of the stock, below it. And every single day I move it up until it finally hits my stop loss. Now this, if we would have locked in all the way from a penny to 6 cents here, you're looking at about 600% profit. So then the stock dies off and it's going down, it's losing momentum, the sellers are moving in there. Now as you can see here, the stock once again, the black line crossed above the red line, therefore indicating another buy signal. Right here we would have purchased, which is roughly about 4 cents, and we would have sold right here about 24 cents if we caught it up on its high. So you're looking at another few 100% profit there. Now as the stock loses momentum, of course we sell off, and we look for another cross, as you can see right here, the third cross. So, and the third cross is roughly right around there, about 8 cents, and you would have sold off about 18 cents. So you're looking at almost 100% profit. And so this is the MACD. This is how we use the MACD. Now the MACD is only tracking momentum. So you can never tell exactly, when to sell off or when exactly to buy in. Now this is the but it gives you a good estimate. Now this is a 12.26.9 setup. I personally do not use a 12.26.9, though it is good, but if you manipulate it a little bit, you can actually find that it can sometimes give you stocks. It can sometimes give you a quicker signal. But if you don't know how to do it correctly, it can also send you a very late signal in which you can lose down on profits. So this is a very quick glimpse of MACD and how we use MACD. Now we use other indicators as well, but MACD is one of our primary indicators, and it's just a momentum tracker. So that's it on MACD. Like I said, if you guys ever need to get in touch with me, just send us an email, give me a phone call anytime during our hours of operation, and if you can, go on there and like our Facebook page. So that's it. Good luck and happy trading.